Hey, good morning everybody. Today is Tuesday, June 28th, 2016. My name is Cliff Backus and this is your pushbuttonstocktrading.com daily video market review. Let's get started this morning with our spectrum analyzer. It's important that we identify where the leadership in the market is. To that end, we use HGSI, High Growth Stock Investors Spectrum Analyzer, to identify market leadership on a daily basis. Let's start by looking at what sectors are showing the most strength as measured by the 100 most powerful stocks in the most powerful industry groups. First, we have financials. The financial sector appears to be fairly strong here, which is exactly the opposite of what we might expect, but I want to point out that most of the names that are coming up on our list are real estate related. Next is utility stocks, which have been very strong, consumer staples, materials, and rounding out the top five we have industrials. Let's take a look at our industry groups. Yesterday, of the 100 most powerful stocks in the most powerful industry groups, 38 came from the real estate investment trust industry. 19 from integrated utilities, 12 from utility networks, 8 from precious metals, and rounding out the top 5 we had packaged foods. These might be good places to look for strength in this market. Let's take a look at the Russell 2000. Stocks have been hit pretty hard with the recent vote by the British to exit the EU. As I've been saying for months now, I think that the Russell 2000 is a key to the market going forward. And I want to point out how yesterday we pulled right back to support at the mid-May low in the 1885 area, and we bounced. We found support at 1885 right on the button. The Russell 2000 has not broken down yet on a technical basis. If we can hold this area of support, that'll offer a little bit of hope to the beleaguered bulls. Right now, the Russell appears to be bracketed by support down here in the 1185 area. I've taken off pretty much all other areas of support because this area I think is very critical at this point. So we seem to be bracketed by support down here in the 1085 area, resistance up here in the 1190 range. We'll see if the Russell can hold that 1085 area. If we hold that 1085 area, I would say that the chances are that the bulls aren't done yet. That noted, let's see what the NASDAQ Composite's up to. But before we do that, stocks continued their sharp reaction to the British vote to exit the European Union, although the selling looks to be overdone at this point. Yesterday, stocks sold off for a second day, with the S&P down over 5% in 2 sessions and the NASDAQ down over 6%. Both the S&P and the NASDAQ have undercut critical support levels and appear for now to be in longer-term downtrends. Both closed below their 200-day moving averages, triggering a market timing model sell signal for both indexes. I would look for an oversold bounce in the market and would use the opportunity to lighten up on some positions, at least until the market begins to look a little healthier. In the past 3 trading sessions, Investors.com changed their outlook from an uptrend under pressure to a confirmed uptrend, back to an uptrend under pressure, and yesterday to a market in correction. Our market timing model is now on a sell signal. A sell signal indicates that we should be off margin and aggressive traders can sell short. We should sell any long position that, if sold at current stop levels, would result in a loss. All stops should be at their tightest levels on all positions. Conservative traders may want to hedge their portfolios with contra ETFs, exchange-traded funds. Yesterday, declining issues topped advancers by nearly 9-2, a very broad retreat, but not as broad as Friday's. New lows bettered new highs, which is often a contrary indicator. According to our Ramosi ratio, large capitalization stocks bettered small and are now outperforming on a 10-day moving average basis. Bulls would prefer to see small caps outperform. Many of our indicators, including our Ramosi swing timing indicator, are showing an extremely oversold condition in the market. I would expect a short-term bounce in the market. We've seen significant structural damage to the market, which I would expect to take some sessions to repair and reverse. Traders may want to take advantage of any short-term bounce in the market to lighten up on existing positions. The market undercut the short-term support areas we've been watching recently. For the NASDAQ, that was the 4678 area, and for the S&P, 2044. If we're to get bullish again anytime soon, the market needs to recapture and hold those levels. In the meantime, err on the side of caution and keep your stops on all remaining positions at their tightest levels. Okay, yesterday the NASDAQ Composite was down 113.54 points, or 2.41%. We undercut a critical support level down here in the 4678 area. That puts the NASDAQ into a short-term, maybe an intermediate-term downtrend. Notice how we put in this high back in the middle of April. We established this low in the beginning of May. In the beginning of June, we put in this high. And now we've undercut this low in the 4678 area. That is structural damage. The NASDAQ is now in a downtrend, and unless we can recapture this 4678 level in fairly short order, I'm afraid that we've got some significant work to do to the downside, or at least some significant consolidation before we make an assault on new highs again. Trading volume yesterday was still heavy. It was above average, but it wasn't as high as the prior day. For you followers of William O'Neill, we are now in a market in correction. We went into a market in correction yesterday. Our market timing model is now on a sell signal, indicating that we should be off margin and aggressive traders can sell short. We should sell any long position that, if sold at current stop levels, would result in a loss. All stops should be at their tightest levels on all positions. Conservative traders may want to hedge their portfolios with contra ETFs, exchange-traded funds. The NASDAQ appears to be bracketed right now by support down here in the 4506 area. Hopefully we don't get down there. And we have to call this short-term resistance. We have to call our prior support level in the 4678 range resistance at this point. Let's see what the S&P 500's up to. The S&P yesterday was down another 36.87 points, or 1.81%. We closed just above the psychologically important 2000 level, holding support down here in the 1993 range. Notice how we undercut the 2025 area. That's the midpoint of this double top formation. We put in the left side of the top back here in the middle of April, put in the middle of the formation back in the beginning of May. In the beginning of June, we put in the higher high, and we've undercut this midpoint in the 2025 area. That's a bearish indication. The fact that we held support down here at 1993 gives the bulls a little bit of hope, but for right now the S&P appears to be in a short to intermediate term downtrend. We need to recapture this support area in the 2025 range. For you followers of William O'Neill, we are now in a market in correction on the NASDAQ. Our market timing model on Friday went to a sell signal, and right now we appear to be bracketed by support down here in the 1993 area and resistance up here in the 2025 range. We'll see if the S&P can recapture this level. Hopefully we can recapture that level, we can recapture our 200-day moving average, and we can get on with the business of making money on the long side. Before we go, I want to talk a bit more about a new feature that we're adding to these videos. We're beginning to incorporate swing trading into our regular presentations. Swing trading is a faster, shorter-term form of trading than the can-slim trading we've normally referenced. Swing trading utilizes a much shorter-term setup than with can-slim. If you haven't mastered the discipline necessary to successfully trade can-slim, please don't attempt swing trading. We will, by necessity, add a new timing model, our swing timing model, to our videos, and will no longer track our Ramosi swing timing indicator. In swing trading, we attempt to always trade in the direction of the short-term market as defined by the relationship between the NASDAQ composite and its 5 and 10-day moving averages. Our swing timing model will have 4 states based on those relationships: buy, positive, negative, and short. We'll talk more about that later. For swing trading, we're going to trade 3 basic setups, both long and short. Those are short-term consolidations, flags, and bounces. These setups can be as short as 5 days, and again, more on that later. Our targets are typically going to be a 10% profit with a 3% initial stop loss. Swing trades typically last up to 10 days and require strict adherence to a rule set. For more information, please contact me. My contact information is on the homepage. And finally, before we go, for those following our contrarian RSI 10 strategy, if the Russell 2000 closes higher today, we'll add a second long position. That's about all I have for today. If you want to talk about any of the stocks mentioned today or any of our market strategies, please feel free to give me a call, drop me an email, or make an appointment. Come by the office, see what we're up to. Contact information is on the homepage. Please take a minute to go to our subscription page and subscribe to Push Button Stock Trading. You can also follow us on Twitter at PushButtonStock. Again, my name is Cliff Backus. That's your daily video market review. Have a safe and profitable day. Keep your stops in place, and I will see you again tomorrow. Please stay tuned for our important disclaimers. All the best. Disclaimers. Push Button Stock Trading Video Market Review is produced and edited by Clifford B. Backus. Mr. Backus is a Senior Vice President of Investments, Technical Analyst, Portfolio Manager, and Partner with the investment firm of Ohanneson Liqueurs Incorporated. Video Market Review is produced solely for the benefit of our clients, friends, and colleagues. Anything written, stolen, and/or plagiarized in this publication is done without malice. Further, the analysis and opinions expressed in this publication are strictly those of the editor and not of Ohanneson Liqueurs Incorporated, its affiliates, subsidiaries, or any of the officers or employees of Ohanneson Liqueurs, Inc. On that note, we submit the following. The analysis, calculations, and evaluations presented herein are based on data and assumptions Ohanneson Liqueurs Incorporated believes to be accurate. Ohanneson Liqueurs Incorporated makes no representation that such analysis or calculations are accurate or that such valuations represent levels at which actual trades may occur. This report has been prepared from original sources, except where otherwise noted, and data we believe to be reliable. Ohanneson Liqueurs, Inc., its affiliates and subsidiaries, and/or their officers and employees or their families may from time to time acquire, hold, or sell a position in the securities mentioned herein. Moreover, opinions may differ from one entity to the next. If we are used in connection with the purchase or sale of any security discussed in this report, we may act as principal for our own account or as agent for both the buyer and the seller. Push Button Stock Trading is dedicated to the education of friends, clients, and paid subscribers. Push Button Stock Trading is an information service only. The information provided herein is not to be construed as an offer to buy or sell stocks of any kind. Push Button Stock Trading is created to aid subscribers in making informed investment decisions based wholly or in part on technical analysis. It's possible that at this time or some subsequent date, the editors of Push Button Stock Trading may own, buy, or sell the investments presented. All investors should consult a qualified professional before making any investment. The information provided has been obtained from sources deemed to be reliable, but it is not guaranteed as to the accuracy or completeness. The editors of Push Button Stock Trading make every effort to provide timely information to subscribers, but cannot guarantee specific delivery times due to factors beyond our control.